Right, let's dive right in today. We're looking at the T5 guide for 2024
Oh, yes.
from the Canada Revenue Agency. Now, you know taxes,
Yeah.
investment income in Canada. Some people might say, well, that sounds kind of dry, but I think it's going to be pretty interesting.
Oh, it's
There's
fascinating.
some twists and turns in this thing, especially for this year.
Absolutely, yeah. There are big changes coming in 2024.
There are big changes, and we're going to uncover some quirks
Yes.
and maybe some aha moments
Yeah.
that could save you some money come tax time.
Exactly. This guide isn't just about filling out the forms.
Right.
It's really about understanding how investment income is taxed in Canada.
So let's start with the basics. Who needs this guide?
Right.
Is this just for accountants, or should everyday investors be paying attention?
You'd be surprised how many people need to understand T5s. This guide applies to anyone who receives certain types of investment income payments. Think interest from your savings account, dividends from stocks, even income from trusts or partnerships. It also applies to the organizations or individuals making those payments.
Interesting. So it's not just about filing the return.
Right.
It's knowing when you even need to in the first place.
Exactly. And that's where the guide is incredibly helpful.
Okay.
It lays out all kinds of different scenarios and helps you determine whether a T5 slip is actually required. For example, you mentioned interest on a savings account. Most banks will issue you a T5 if your interest income exceeds a certain amount.
Yeah.
But what if you loaned money to a friend
Oh, interesting.
and they're paying you interest?
Right.
That might be a situation where a T5 is not necessary.
Okay. So the guide helps us figure out those gray areas,
Yeah.
the scenarios where it's not so obvious.
Yes.
But I know there are some big changes happening this year,
Yeah.
especially when it comes to capital gains. What's the scoop?
Right. Budget 2024 introduced a really significant change to the capital gains inclusion rate. It's increased from 50% to 66.66%, or two-thirds, for any capital gains realized from what they call dispositions after June 24th, 2024.
Okay, hold on. For those of us who don't speak fluent tax, what does disposition actually mean?
Sure.
And what are the implications of this inclusion rate change?
Okay, so disposition just means selling or otherwise disposing of an asset.
Okay.
So think of it as the moment you get rid of an investment, like selling stocks or real estate.
Got it.
And that inclusion rate, that's the portion of your capital gain that gets added to your income for tax purposes.
Okay.
So with the rate increasing, a larger chunk of your profit is now considered taxable income.
So if I sell stock after June 24th
Right.
and make a profit,
Yep.
more of that profit's going to be taxed.
Exactly.
But you mentioned this only applies to dispositions after that date. What happens if I sold something earlier in the year, before the change kicked in?
Well, that's what makes 2024 unique. You essentially have two sets of rules for capital gains, depending on when the disposition occurred. Gains realized before June 25th are taxed at the old 50% inclusion rate,
Okay.
while gains after that date are subject to the new 66.66% rate.
Got it.
So it's a bit of a split year.
I see. So how does all this play out on the actual T5 slip? I'm guessing the CRA didn't just leave things as they were.
You are absolutely right. They've modified the T5 slip to accommodate this change.
Okay.
There are new boxes, specifically Box 34 and a revised Box 18,
Wow.
designed to capture the different inclusion rates depending on the timing of the disposition.
Okay, this is where I start to feel a little lost in the weeds.
Sure.
But I'm assuming the guide walks us through all of this.
It does in quite a bit of detail, and it even gets into some finer points that many people overlook. For example, let's say you have a capital gain that straddles that June 24th cutoff date. Maybe you entered into a contract to sell an asset before the date, but the actual sale didn't finalize until after. The guide actually provides an option to prorate the capital gain,
Really?
essentially splitting it between the old and new inclusion rates.
Wait, prorate the capital gain. That sounds potentially very helpful, especially if we're talking about a significant profit. But how does that work in practice? Is it complicated?
Well, the guide actually outlines the formula you can use to calculate the prorated amount,
Okay.
so it's all laid out for you.
Okay.
And it could make a real difference in your tax liability.
Okay. You've convinced me that this guide's worth a closer look, even if tax documents aren't exactly my idea of, a good beach read.
Yeah.
But I have to be honest, I'm a bit intimidated by the sheer size of it. Is it actually user-friendly, or should I just hand it over to my accountant and call it a day?
It's understandable to feel that way.
Yeah.
But despite its length, the T5 guide is surprisingly well organized.
Okay.
It breaks down information into really digestible sections and actually does a pretty decent job of explaining things in plain language.
So where would you recommend starting for someone who's new to all of this?
I'd say one of the most helpful sections is actually titled, When Do You Have to Prepare a T5 Slip?
Okay.
It lays out the specific types of income that trigger that T5 reporting requirement.
Right.
Then there's a companion section, When Do You Not Have to Prepare a T5 Slip? Which covers the common exceptions.
So they actually tell you when you don't need to file.
Exactly.
That's refreshing. I feel like so much of tax information is like, here's what you must do.
Mhm.
It's nice to have some clarity on what you can skip.
Right. And it's in those exceptions where you often find those aha moments,
Yeah.
those little details that can make a big difference. Remember our earlier example of lending money to a friend?
Yeah.
The guide specifically states that interest on those private loans doesn't require a T5 slip.
Okay.
So that could save someone a lot of unnecessary paperwork.
Okay, that's definitely an aha moment for me.
Right.
I never would have thought of that. But let's say I've determined I do need to file a T5. What then? Is the guide helpful in actually filling out the form?
Absolutely. There's a whole section dedicated to walking you through each box on the T5 slip, explains what information needs to go where. They even provide tips on how to avoid common errors.
Speaking of errors, I noticed the guide mentioned something called reasonable effort. What's that all about?
Ah, yes. This is where things get interesting. The reasonable effort rule relates to the responsibility of anyone preparing a T5 slip to obtain accurate information from the recipients, particularly their social insurance numbers, their SINs.
Okay, so it's not enough to just send out a blank form and hope for the best. You actually have to put in some work to get those SINs.
Precisely. The CRA is very strict about this. The guide clearly states that failing to make a reasonable effort could result in a $100 penalty for each incorrect or missing SIN. And it's not just on the filer. Individuals also have a responsibility to provide their SIN when requested. It's a two-way street.
$100 per instance, that adds up quickly. But what exactly constitutes reasonable effort? What if someone refuses to give me their SIN?
That's a great question, and this is where the guide could be a little bit more helpful. While it mentions the requirement, it doesn't provide a lot of practical guidance on what specific actions would satisfy that reasonable effort test.
So how can listeners protect themselves? Are there specific steps they can take to demonstrate they've made a genuine attempt to obtain the necessary information?
Absolutely. Documenting everything is key.
Okay.
Keep records of your requests for SINs, whether it's through a formal letter, an email, or even just a note of a phone conversation. If someone refuses to provide their SIN, document that refusal as well. It's all about creating a paper trail that demonstrates you've done your due diligence.
Oh, okay. That's a great tip. It sounds like being organized and proactive is essential when it comes to T5 reporting. But what happens if, despite our best efforts, we still make a mistake? Is all hope lost?
Not at all. This is where amended slips come in. The guide has a whole section dedicated to explaining how to correct errors on previously filed T5 slips.
Okay.
Whether you file electronically or on paper, there's a process for amending the information.
So even if I realize I messed something up, months later, I can still fix it.
You can, and you should. The CRA emphasizes the importance of correcting errors promptly, but they do provide the mechanism to do so, which is good news for anyone who has ever made a mistake on their taxes. We're all human.
That's reassuring to know.
Yeah.
It takes some of the pressure off knowing there's a way to fix things if needed. This whole deep dive is making me realize there's a lot more to T5 reporting than I initially thought.
It's true. The T5 guide provides a really solid foundation, but it's really just the tip of the iceberg when it comes to the complexities of investment income and its tax implications.
Yeah.
There's a whole world of other CRA guides and folios and interpretations out there that delve into specific scenarios, niche situations.
So the T5 guide is like a gateway drug to the vast universe of Canadian tax law.
I wouldn't quite put it that way, but there's definitely
Okay.
more to explore if you're so inclined.
Yeah.
And that's actually something I find really fascinating about this guide. It provides these specific references to sections of the Income Tax Act that are relevant to various aspects of the T5.
So if I'm feeling extra ambitious, I can go beyond the guide itself and delve into the actual legal language.
You absolutely can, and the CRA has made a lot of this information readily available online.
Okay.
For those who want to really take a deep dive into the legal underpinnings of the T5, it's all there waiting to be explored.
This is making me realize how much knowledge tax professionals must have.
Oh, yeah.
They're navigating this intricate web of laws and regulations on a daily basis.
Yes, they are.
But all this talk about rules and penalties is making me wonder about something else.
What's that?
What about the CRA itself? What's their responsibility in all of this?
Yeah.
Do they have any obligations to taxpayers beyond just collecting taxes and enforcing the rules?
That's an excellent question, and one that often gets overlooked, you know?
Yeah.
It's easy to focus on our own obligations as taxpayers.
Right.
But the CRA also has a responsibility to be fair, transparent, and accountable.
So it's a two-way street. We have obligations to them, but they also have obligations to us.
Exactly. It's a reminder that the relationship between taxpayers and the CRA is a complex one, with rights and responsibilities on both sides.
And it's a relationship worth understanding more deeply. Perhaps that's a topic for another deep dive. But for now, let's shift our focus back to the T5 guide. We've covered a lot of ground, from the basics of who needs to file to the nuances of capital gains and the importance of reasonable effort.
We've also uncovered some hidden gems, like the option to prorate capital gains and the ability to amend previously filed slips.
Yeah.
It's clear this guide is full of valuable information for anyone who wants to understand their tax obligations and potentially even save some money.
Absolutely. But before we wrap up our T5 exploration, there's one more intriguing section I want to touch on. It deals with something called unclaimed amounts. Now, that sounds like a financial mystery waiting to be solved.
It does, doesn't it?
Yeah.
And it's a reminder that the world of investment income is full of unexpected twists and turns. So let's dive into this unclaimed territory and see what we can uncover. This section on unclaimed amounts, it's a bit of a hidden gem, I think, within the guide.
Okay.
It delves into what happens to investment income that's been reported, but hasn't yet been claimed by the rightful owner.
Okay, I have to admit, I am intrigued. We're talking about those like lost dividends and interest payments that just kind of vanish into thin air.
Right.
What happens to that money?
Well, it doesn't exactly vanish. The guide outlines the process of withholding and remitting taxes on these unclaimed amounts. So even though the owner hasn't been identified or located, the income is still subject to taxation.
So the government's essentially holding on to this money, and they're still collecting taxes on it. What happens if the rightful owner eventually comes forward? Do they get all that money back, including the withheld taxes?
They do, but there's a specific process involved. The guide really emphasizes the importance of filing separate T5 slips and summaries for each year the amounts were received, even if they're all paid out in the same year.
So they're not just getting a lump sum and a generic tax form.
Right.
They're actually getting a detailed breakdown of what was received and when.
Exactly.
So they can properly claim those amounts on their own tax return.
That's right.
Okay.
It ensures accurate tax reporting and credit for the recipient, so they're not unfairly penalized for someone else's delay in claiming the income.
That makes sense. It's all about maintaining that balance of fairness and accountability, even when dealing with, these kind of unusual situations. This whole unclaimed amounts section is making me wonder, how often does this actually happen? Are we talking about significant sums of money or just, a few stray dividends here and there?
That's a question the guide doesn't really address. It focuses on the procedures, not so much the prevalence of unclaimed amounts.
Okay.
But it does make you think, doesn't it? How much money is out there just waiting to be claimed? It's like a financial treasure hunt.
It really is. Maybe we should start digging through our old records and see if we have any forgotten fortunes waiting for us. But on a more serious note, this whole deep dive into the T5 guide has been incredibly eye-opening. I feel like I'm leaving this conversation so much more informed about, the nuances of investment income and the responsibilities of both the filers and the recipients.
Yeah, I'm glad to hear that. And it really just underscores the importance of resources like the T5 guide. They provide really valuable information that can help individuals navigate what is often a very complex world of taxes.
Absolutely. So to wrap things up, what's the one key takeaway you hope our listeners will remember from this deep dive?
I'd say it's this. Don't be intimidated by the tax system. Knowledge is power, and with a little effort, you can understand your obligations, protect your interests, and maybe even uncover a few of those hidden gems along the way.
Well said. And on that note, we'll leave you with a final thought to ponder. The guide briefly mentions the CRA's increasing emphasis on electronic filing, especially for those filing more than 5 slips. This raises the question, what are the implications of this shift toward digital for both filers and the CRA itself? It's something to consider as we navigate the evolving landscape of tax administration. Thanks for joining us on this deep dive, and until next time, happy exploring.